Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap Order Flow tools with auction market theory using evolved profile as a chassis for structure in the intraday developing time frame. This stream is also based on structured trades that are available to all of you at no cost in the Bookmap Discord Trader Lab chat, as well as a library of webinars. And the Trader Lab chat is a community of like-minded traders that have come together who leverage their collective experience with the objective of building out the business side of trading, developing trade plans, and extracting metrics in order to establish a statistical edge. Trading is not an indicator-based business, though they have a place. Trading, in my opinion, and based on my experience, is a statistically based business. And the comparison is gaming theory or how casinos operate. And essentially, casinos only play games that give them an edge. They play them exactly the same way every time. And the cards come out of the deck randomly. The traders or gamblers play the cards randomly, so it is a completely random environment, just like ours. So if we compare our environment, which we really can't predict with any accuracy from one moment to the other, due to all the variables, we can compare it to the casino environment. But one thing that we have in common is that if we have the discipline to use anchored inputs, which means play the game the same way over time, in a random distribution, we have the opportunity, assuming we vet a plan, in other words, know that it actually has an edge, and then develop the discipline to execute it and overcome our emotional states. And notice that the casinos are not emotionally attached to the outcome, and they see losses, which are inevitable to the gamblers, which keeps the gamblers coming back. They see those losses as cost of production and overhead. Maybe, as traders, we should consider using a successful business model and transfer it to us and let us use a model instead of trying to invent the wheel. How about we just roll with one that already works? And if you're not having the progress or success you're looking for, you might want to consider visiting the Trader Lab. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or representations or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades that are available to all of you to download. And if you're in YouTube, there's a link at the bottom of YouTube to go to the Bookmap Discord Trader Lab chat, and you can avail yourself of all the resources. 60 PDFs, I believe, of structured trades, a library of webinars, and of course, a community of like-minded traders. And all of this is available at no cost, which I think is pretty nice. My mother used to say, free is good. All right, I've got to get back to the open. Obviously, a pretty big day today. A lot of range, a lot of volatility, a lot of opportunity, and of course, risk. So we're going to take a look at this, and we're going to discuss structured trades. Now, the thing about structured trades is you can avail yourself of these. And it is not about, and it's very important to understand, it's not about replicating what somebody else does, me or anybody else. The idea of the Trader Lab is to give you tools that may accelerate your development. And on the other side of that, hold on one second here, let me make sure all my levels are on here. On the other side of that, also give you an opportunity to adjust these to your psychology, your mentality, if you will, your emotional states. So that's where the Trader Lab comes in. And of course, the community of other traders who are doing the same thing as you, posting screenshots, etc. All of this contributes to your development. And I wish I had something like Trader Lab when I started out. In 1980, we didn't even we didn't have computers, we didn't have an internet. So go think about that. How's that as a place to start as a trader? a developing trader, I should say, because wow, did I go through a lot of dead ends and rabbit holes. And I thought I was on the right track. And the reason I thought it was that I would have winners, right? And of course, losers. And the winners kept me encouraged to keep doing what I was doing, but to make it better. In other words, to fix it. And after doing that for a number of years and continually getting excited of my progress and then see it fall apart, or maybe there wasn't a statistical edge because I didn't understand gaming theory early on. I was trying to fix something that was flawed in its basic, in the basis of the methodology. So random wins keep us potentially thinking we're getting there. We just have to make it better. But if the basic underlying process or concept is flawed, then we're never going to get past it. We're just going to keep waking up in the place I call Trader Groundhog Day. And if you're waking up in Trader Groundhog Day, you might want to consider visiting the Trader Lab. Because no matter what, you might walk away with something more than you have today. This is the RTH Open. This is the overnight volume point of control. Hold on a second. Get some noise, which I don't think you want to listen to. So the overnight volume point of control. Now let's talk. You know, things are pretty wild in the ETH, so I'm not going to go too much into that, except to say that we had a big reversal. And, early on, we were looking for a gap. And I posted this in the Trader Lab. It's probably around 4 in the morning, somewhere in there, maybe 5, that we were looking for a gap and potentially trend day up or responsive selling. Now, which one? Who knows? My inclination was gap and go at the time, because at the time we were 20 points or 15 points above yesterday's high. So, so that's where I was early on. But then as the ETH was going on, things were changing. So when things change as traders, we have to adjust to it. So I can't predict anything. I'd love to tell you I have a crystal ball, but still waiting that to come back from the factory because it is apparently defective. I can't predict anything. The goal in trading is to define context, which was potentially going to be up. And if it doesn't fit the context or it changes, you have to adjust with it. And that's part of having structured trade plans. The plan tells you what's going on. So here is the RTH Open. This is the overnight volume point of control. Now, what's important about this is the retail price or fair price. If we open below it, the possibility is to come back and check it. And if it's too high, go south. Okay? So we have a statistically high probability of coming here, and we have a high probability of coming here. Now, when I say statistically, there's a document you can download in the Trader Lab that gives you the probabilities of going here and coming here. So the first thing would be open, looking for a test of this level, and then if we can't get over it, a potential short back here. So that's the first structured trade. Now, what it does, this is part of the joy. So there's a couple pieces here. Now I'm going to show you. If this is the retail price and the market opens lower, the possibilities are as follows. This, hold on one second here. Got to label this. Some of my level, let me see if this is correct. Yeah, this is correct. Okay. This is called the variable high volume node. I made it up, and you guys have been following the stream, I make things up. I make it up because when I started with this, it didn't exist. So I had to do something. So I made these things up. And what a variable high volume node is really is if you think this is the retail price, in other words, highest volume is a shopping experience. You go to the store. I always have to repeat this, and I appreciate you all visiting Trader Lab. When you go to store and you buy your tuna or something, it has a retail price. High volume takes place at that price. That creates our what's called volume point of control. Now, it doesn't control, It tells us what the fair price is at that time. And this thing changes based on where volume. And that we have a dynamic auction. That's what creates this. And an auction is simple. If the price gets too high, the volume dries up and it'll create an outside edge. No more buyers. And it's also what a consolidation looks like. Outside edge is a consolidation. The volume drops. Then if the price goes on sale, the volume will drop on the low side because the sale doesn't go indefinitely. And the market can rotate back to retail. Then you're back there paying your dollar for your can of tuna. However, here's the next piece. Suppose the price becomes too high and we don't come back. But instead, the shoppers go, I'm not shopping here anymore. I can get it down the street lower. Or it's too high, I'm not paying it. Let's find a fair price lower. And the market can leave it. So there's two possibilities. Open, come back and check. Or open and not. So this open suggests the following. Here or not. And what did we do in the ETH? Selling off. I don't know about you, but a long is not such a good part of the plan. For me, I'm looking for a short. And I have a couple places. And this is one place to do it. This is going to be the other place. Now, here's why. So we have structured trades in the Trader Lab, right? And you guys can download those, reverse engineer them, make them into something that you can relate to and understand. If this is too high, and I don't know, if this could come here, it comes here, it tests, I would sell it. I'm not paying that. Boom. Short. But let's look at the same concept now here. I'm looking for this to sell. I open. This is my developing volume point of control. I see, I'm going to go into minutia. I always do this at the beginning of the stream because once you see the minutia, you're going to understand or have a better understanding. I get a buyer here. In other words, liquidity. I see buyers here. So I've got open. I see a buyer and a seller, and I'm going, I don't know. I want to sell this. Buyers. Okay, Lewis, going north. I'm ready. Finger on the mouse. Looking in this area for rejection. That's the plan. What am I going to do? I got to follow the plan. Follow the yellow brick road. I see this. I'm looking for that. Okay, so you know. Now, I have buyers here. And right here, I'm thinking this. This comes into the book. So this was here, goose the market, and it might be, and I can't tell you because I don't know, the same guy flipped. He flips. Now what? These buyers here are stuck. Now, we don't know until this. Oh, look at the sellers. Oh, lovely. So right here, the sellers take control. So here's what I know. Right here, the buyers are stuck. This is how order flow can help you. I mean, this is delta. By the way, what's delta? Aggressor. You know, green bubble, positive delta, aggressor. Now, we don't know with delta what part of mix of it is stops and what is aggressive, market orders, longs. So buy stops appear because they become market orders. In delta, they look the same as buyers, initiators. So you just have to take that in consideration because delta is not a perfect tool. But we could see it here also, okay? So this is showing us the delta above and it's showing us the selling below, okay? And you see the volume went off here. So anyway, they're stuck, which we don't know until this. Now, this is our retail price. So since we left this, it might say this is too high. Why didn't we come back? I'm not paying that, but we don't know. So let's see what the Trader Lab structured trade is. So now liquidity comes into the book. So I have a couple possibilities. I have a retracement here, a retracement to mid, a retracement to VPOC, a retracement to VWAP, and my trade would fail over here, okay? Because this is where the buyers are trapped. They're not happy at the moment. So let's look at the behavior. This is my resistance. Now, I label this, I call it a variable high volume node. Now I'm going to try to move along real quick. This is called VPOC migration. Let's think about what it says. I'm not paying that. Break away. Now come back. Is this too high? Is this too high? Well, maybe that's too high. Well, then what's the next shopping experience? Here. This is too high. What about this? Shift down. This is called VPOC migration. It's a structured trade in Trader Lab. Now, here's another piece. Stuck, seller, buyers here. Let's go. Let's go. This is my location to short. There's my liquidity coming into the book. Probably this guy. I don't know. But it's like a blockade. Now, you don't know with liquidity, or what are they going to do? They're going to pull and then flip, just like what happened here. See, the thing with liquidity, you can't think of it like something that you can depend on. It's a suggestion of potential, and it's slippery. I always think of it like stepping on a banana peel. So this is too high. Liquidity in the book, VWAP mid. Buyers, are we coming back here? Watch. Look here. This is, I'm not paying that. Yeah, but it's on sale. Here's your high volume. If we don't come back here, I'm not paying that. I'm leaving. I'm going to another store. Let's lower the price, the sellers say, because now these buyers, why did it go up? They were absorbed. The limit order book is we don't see the absorption. We have to assume when we see buyers and we don't get buyers above that they were meeting sellers. And the sellers were absorbing these buyers, and we ran out of buyers. Off we go. Too high. VPOC migration. I'm in minutia. What is this called, guys? It's microstructure. And in Trader Lab, this is kind of how, and think of Russian dolls. It's the best way I can think of describing what's called fractals. The auction takes place in all time frames, if you will, and I don't use time in what I do because the clock, it's not up to the clock. It's up to these participants how this behavior manifests itself. Whether it takes 1 second, 5 minutes, 60 minutes, doesn't matter. It's when do the participants make it, shall we say, pass judgment on value. I'm not paying that. There's trapped, selling. Oh, let's go north. This drops down too high. These guys are trying to buy. They throw the blockade up. Sellers, VPOC migration. This is a Trader Lab short. Depending on how you frame it, this is a short. The trade fails over this high, and this can be tested. So you would be out here a little bit. VPOC migration. What is that telling us as great shoppers that we are? Just, you want to throw S&Ps in the shopping cart, or do you want to take it out of the cart and leave it in the store and leave? For me, leave. So this is our first short. Let's look at it. And first target, overnight mid. Remember, what did we have? Top of the stream, overnight volume point of control, location to sell. We didn't get there. The selling started here. So, c'est la guerre. Overnight mid. And I know I didn't give you statistics, but I'm going to give you a little one here. 1 second. Okay. So you know there was a 79% probability that we were going to check the overnight volume point of control. That's why it was the first location for me to short. Nada. Didn't happen. The overnight mid has a 62% probability. We are skewed to the upside statistically. But you know what governs everything? Something called context. And in the Trader Lab, I talk about context. The statistics are not sensitive to context. They only relate to where are we in relation to yesterday's range. So the context, what happened in ETH sets up you only want to be a short, at least currently. So that's why the statistics but the closest statistic I have is this. So that's why this is a scale or a target. Now, how you manage your trade, and I always talk about a minimum 2-lot configuration, and for developing traders, we're talking starting out before you tweak and adjust. The first job of any time you put a trade on as a developing trader is a minimum 2-lot configuration. Now it's up to you to vet it. And the job of the first contract is to buy the stop on the runner. You get risk neutral. Then you can gradually expand. So let's assume I'm going to make it up. You're risking 2 points. You on a 2-lot. So you would scale at 2 points, and then your stop would be break even. So the worst that happens if it comes back to where your stop is, you scratch. Broker sends you the gift basket. However, as you develop, you might go to 1.5. In other words, instead of 2 points, you might go 2.5 points, or I'm sorry, 3 points. So it would be 1.5. So this way, if you get taken out, you still got a couple of ticks and you go for a happy meal. So this is the first target. So let's continue. And if you have questions, please post them. I'll do my best to get back. Oh, I got to label this. Variable high volume nodes. You see what I'm doing? I'm following something called process. Remember, in the casinos, their games are anchored. They do them exactly the same way. They don't know the market's going to come down here and take out the high of the day. I don't either. However, I suspect that's not what's going to happen. Let me just check if there's any questions at the moment. How am I sounding in YouTube? Is this good? Is it clear? I want to make sure it's not clipping out or it sounds crummy in YouTube, that it's like stereo. Let me know if it's good or if it's kind of crummy. And by the way, if you're finding this interesting, please give a thumb up in YouTube. It helps the stream. Thank you, Evan. Okay, VPOC migration. Now, this was the previous high, all-time high, and this is the gap fill also, I believe. There's more. Hold on. I got to mark this, right? VPOC migration. By the way, now remember, in the Trader Lab, it's a matter of understanding market mechanics. That's where when I originated this stream, Bookmap asked me to do it. It's really, what is the number one piece in trading? It's knowing what's going on. It's not based on your indicators, though they have a place. It's based on understanding market mechanics. So let's think of the market mechanic. We filled the gap here, and here's yesterday's high. Oh, wait a minute. Yesterday's high. Let me find this for you. Where is it? Can't find it. Oh, there's a 63% probability that we're going to get to the previous day's high, and which is here. And what is waiting down here? Liquidity. That's the limited order book. And that is kind of saying, hey guys, so let's look here. These green boxes are absorption. Now, I'm not discussing trade management with you at the moment. It's another topic. If I have time, I'll get into it. And that is something you vet and you determine for yourself based on your psychology. I know traders in the Trader Lab that put a trade on and go to the gym. I know other traders that are going to be more micromanagers. You know, they're going to trail like here. Sellers, these guys are stuck. Test of the volume. Stop will go here. Sellers, these guys are stuck. Buyers, break back, come here. What's this? An ad in the Trader Lab, or you're just a tourist working, on your crochet. This is now the new retail price. What is this? This is an ad or nothing, and your stop is here. Once this breaks down, you be short. Notice what this is. Variable high volume node. And what is that in the language of the market? I'm not paying that. Are you out of your mind? That's why it's an ad. And if you didn't get in here because by the time you blink, it's over here, guess what? This is the location to sell right there. and there's your seller. So your ad, if you could do it here, would be, well, you can't, because by the time you wake up, you would do an ad here, and your stop would be above this, preferably over here. Why? These buyers are trapped here. What's this? Buyers are trapped here. You see? So what does it say? Let's speak the language of the market. Too high. That's the volume, microstructure. This is the sellers, lack of buyers, but it's sellers. The buyers take a shot. Where's the volume here? Look here. Now, this is not necessarily a short unless you're very, very experienced in the trader lab. These are all the same process, and this is a fractal. You notice the volume here? For the day at the time, this was the highest volume. Do you see the behavior, how it works? Come back. I'm not paying that. Imagine going back to a store. You're a shopper, and you don't want to pay this. I'm leaving. Well, you like shopping here. It's convenient. You come back and check it. They are still charging how much for tuna? I don't care. I'm not paying it. You leave. Now, let's look over here. Now, look. You see this high volume node? I'm just stepping out for a moment, you might say, to give you what's called the sidebar. There's the volume. This is a consolidation. We see these all day, right? But in the microstructure, and think Russian dolls, because it's all the same. This is a little doll. They all work the same. They all operate the same. This is what fractals are about. This is a fractal. And I look at this thing and I'm going, I don't know. Seller. Okay. What is this? Too high. Watch. Where's the volume? Look to the right. You see that little node sticking out. Break. Pull back. Short. Stop here. Or break. Pull back. Stop there. Trailing. Same structure. Pull back to where? The volume. Here. Same structure. Stuck. And you're out of luck. Sorry, Charlie. Remember Charlie the tuna? Break. Sellers in control. Now, for the developing daily time frame, this is now the new retail price. This represents the volume of the developing day. The whole day, right now, you want to buy tuna or S&Ps. This is the price. In the fractal, this was the price. So in a consolidation, you guys understand breakouts, when there's buy stops up here, sell stops under here, theoretically. If we can't take these guys out and we get our sellers, and then the buyers take a shot and they can't regain this where the other buyers are, then they are under the bus. The sellers take over, the buyers give a counterattack. They're not getting above, they're trapped. Potentially, I got to say. Trapped. Hope that's logical. So in the fractal, it's a short. Now again, this is just a way to monitor the trade. If you're advanced, you can trade them. It's all up to you. This, though, is a structured trade in the Trader Lab. This is microstructure taking a fractal of the same process. I hope not spending too much time, and I hope this makes some sense and has some value for you. Too high, another short in Trader Lab. So if you're going to take this continuation trade, you'd have a shot here. There's your seller. Now what? Watch. VPOC migration. Watch the behavior. Now there's two things, right? Watch. Two pieces. Follow the yellow brick road. I make it yellow because back in the day, Wizard of Oz, followed the yellow brick road. Follow the volume. Follow the pricing. This is auction market theory, and this is what the volume profile is about. It's about attempting to read the behavior of the market participants. Now, I don't use any indicators. Why would I use an indicator if I can stay right here and know what's going on here? What does my indicator tell me? I don't know. I don't use them. And why don't I use them? Been there, done that. And anything in the retail space has been gone through by everybody who's walked in your shoes before you. That might tell you something considering how they do. So this is another short. Boom. Now right here, what's this? I'm not paying that. And what's up here? I'm not paying that. Watch. VPOC migration. Is this too low? Well, let's go back and check. Is this too high? Right here. I'm not paying that. You're out of your mind. Another short in the trader lab, or you're just managing your trade. Neither here nor there. And let's go back and check the price. I'm a real fan of shopping down the street. I really like this store. Now the price is too high up here, and now the price is too low here. So this is an area of one side's going to get pushed out. But we know the trend is down. We're inside yesterday's range. We're below the previous all-time high. See you later, alligator. Watch. Too high. Gotta throw it in here. This is Trader Lab, so you're hanging out. This is the only, other than the ads, this is it. I think it's a good start to the day. What do you guys think? Did you participate in this? And the reason I'm asking you the question is, if you don't understand how the market works, I think you're missing a big piece. Because if you think you should be getting long in this context, and if you did, then you might be missing something, like an understanding of how the market works. Let's look. Once we're below this becomes your resistance. Now, we come back here. No good. Didn't get there. If it came back here, it would be another ad. Now, it doesn't mean you can't find another place in. And this is the report, right? 845. So, anyway, nothing to do with that. Watch. Now, this here is too high. Let's see what happens. Now, we may never come back here because there's your report. I thought my data went bad. I saw this. I said, what's going on here? So you're either short. Oh, statistically, I forgot to mention. Overnight low. I'm getting slow here. Let me see if I can find it. A 32% probability. That's not very good, is it? But you know what? The statistics, remember, don't know what's going on. Now, this is important. This is called the microcomposite volume point of control. What is this, you ask? The consolidation that we've had since that breakaway gap, and I guess it's about 6 days of consolidation. This is the highest volume in that consolidation. Now, this is where things get interesting. Remember, Russian dolls, fractals. Oh, and there's another piece I forgot to mention, but I think I'll just keep going. This is the retail price for the whole consolidation. In other words, all the volume is, so this would be a target potentially right here for the short, this. So this trade could be done here. It could also, now, but there's another structured trade. So I got to get back to it. I have to tell you about it. And this is just really, it's not one that I would take because I would already loaded, I wouldn't, but this would be a trade. I'm just going to say, if you had more to put on or whatever you wanted to do, let me explain. Yesterday, this was the highest volume, another retail price. The market comes back to these levels and it can get to it, bounce off, and in a downtrend, maybe not, but it would be a target right here. This is a target also. So we got this coming down right there. And here's the other part of it that really is interesting. In theory, I'm using the word theory because it is auction market theory. If this is the current retail price and this is yesterday's retail price, it is a target, and then we can go from here to there That's a structured trade in the trader lab. Now, here's the problem with it. It's counter trend and everybody's jumping out the window. Would your plan tell you to buy this, or would your plan say take a profit because it has about a 70% probability of getting checked, which I forgot to mention, but that's the deal. So this trade could be, the short could be over here, or you're protecting behind the mid and the VWAP because we are inside the range, and this would be the next target. This is just matter up to your plan. Me, watch now. So we have another leg down, and I think, let me see where I am. Okay. Value area low is a target. I sometimes use them. I'm going to give you a statistic on it. It's only 17%, but it's structural. So the percentage of probability is not the most important part. What's important about it is that once you're inside the previous day's range, and yesterday was pretty wild also, there's a possibility of getting down here. Now this, let me just see where I am. At 9 a.m. we had home sales, so we had another report come out. Now, this is a high volume area that covers all the days in the consolidation that we are falling back into. If the market comes back from below, then it's a possibility in the trader lab, it's a structured trade, to sell it. So let's see what we get. Now, the other thing about anything you do in trading, there's no precision. And that's, we want certainty, and wrong business for certainty. So this is a short up here. Doesn't get there. Market goes down, it's like a crumb, right? And all those things you say, oh, look at that. Now what? What do we got up here? Location. Now this is the current VWAP. And at the time, this is the volume weighted average price, okay? VWAP. You guys know what a VWAP is. So what do I have? This and VWAP. So there's a possibility up here that depending on the behavior here, we might bounce off it and come down again. So that's a trade. It's up to you. VWAP. That's a short. Now there's another piece here. 9 a.m., the low at 9 a.m. is a target, which would be, I believe, here. Wherever this low is, becomes a statistical target. If you take the shorted VWAP, you'd be looking to scale, and you're looking to take this low out. If we take this low out, which is made before 9 a.m., if we come back and take it out, I think it's here, and we take it out, then we have the possibility, once again, to retrace, and then if we take it out, to take out the first hour's low. Either way, the trend is down, and we're going to look for this. So the idea of selling the VWAP is to take out that low. And that happens at 9:30, where this is locked in. It's called the IB stat. Again, available in the Trader Lab. So let's watch. VPOC migration. IB, initial balance, locked in. I believe it's here. Or down below, I mean. Sorry. Now, VPOC migration. Now, notice what happens here. You've noticed in the structured trades that when this shifts down, we like it when the market goes below it. But notice there's a change in behavior. We don't go below it. we go the opposite way. What is that saying? Let's speak market. Too low. Uh-oh. Now what? Well, here, right here, if you're in Trader Lab, now this is subject to your plan, my plan, get out. Now what? Well, I have another structured trade in the Trader Lab. It is called VWAP to VPOC, structured trade. Remember, if you're in Trader Lab, and alignment with this. That's my big, this is, and remember, this is an area. It's not like you hit a wall and you bounce off it. I mean, you can hit a wall, but levels are only areas. This is, remember, this represents all the volume of the previous days. I think it's 5 or 6 days. But this is the current behavior right here. This is the developing time frame. So what this represents here is an auction. Oh, it's on sale. I'm not paying that. And it brings in all the volume for the day. So I know this price here is, which is a high volume node, remember, that's too high. I'm not paying that. These guys rejected it. And don't forget, this was a short for us too, okay? Then this thing shifts, it breaks up, it's get out because maybe we're going to come all the way back. But we have a structured trade in Trader Lab. And where was my volume here? Let's look at the story. I'm not paying that. There. Now I come back to where the price was rejected. And I'm at the VWAP. It is a structured trade, and the goal is to come here and then continue. So let's see what it does. Short to here and then hold. Structured trade. I'm going to come up for air here in a moment, but there's so many trades that are Trader Lab trades. Now we get down here, you know, and let's look at this. Let's talk again. Now, there's other trades coming up. Before I go on, now trade management is something you do. You figure out, because that's subject to fractal. I'll give you an idea. Too high, sellers. These guys are stuck. There's my seller. This seller is absorbed. Interesting. There's the liquidity. Let's just follow this. Where's my buyer? My last buyers are here. Then I'll answer questions. Please post them. Takes a little bit in YouTube for them to come through. Seller, 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 seller. And here's something else I'm seeing. Absorption, 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 liquidity, absorption. And this is puts my antenna up because I'm getting buyers on the other side here. Absorption, absorption. So this puts the antenna up for me. When I see this, I'm going, well, there's a passive side. That's what absorption is taking these buyers. I'm sorry, sellers. So the sellers are being absorbed. That doesn't mean, as long as there's more sellers, even though they're being absorbed, they're going to move lower. At some point, we don't know where that is, because you don't, the market's potential, I mean, it could just keep going to zero, right? 3,000 icebergs. So in this absorption was icebergs. This absorption was icebergs. This is how the stop an iceberg detector can help you. So I know that, and by the way, you know what an iceberg is. If it says 1,400, there's more. 3,000. A lot of buying by the icebergs, and the selling continues. Okay. I get down here. Here's my sellers. Now notice the opposite behavior. Buyers are stuck here, right? Sellers. Where's my buyers? Buyers. Sellers are here. Buyers. Notice there's more. All of a sudden we're seeing some buyers. Okay. Sellers are here. Going down, Lewis. This guy is stuck. Seller. Going to zero. Absorption. Absorption, 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 absorption. Doesn't, right? Going lower. Reversal. Uh-oh. Now, there's another trade coming up here, but I'm going to stop and look at your questions. Thanks for your patience. I hope you're getting something out of this. Please give a thumb up in YouTube. First, there's no longs. Well, actually, not completely correct. Let me just say, up to this point, there's no longs. So I can't answer you because look what happened in the ETH. I mean, we were already going under the bus in the ETH. So, I mean, that was a huge range and that thing just got ripped. So the way I can answer that is I can't imagine long until we come up to the next trade here. And even then, I wasn't so sure. There's no sure. YouTube, do we have any questions? You guys doing okay? Please give a thumb up. It helps the stream. Also, if you're new and you're visiting Trader Lab, there's no cost to be part of the Trader Lab community. There's a link in the bottom of YouTube if you're interested in visiting the Bookmap Discord Trader Lab chat. There's 60 PDFs of these structured trades you can download, reverse engineer, so you can anticipate the trades. You know, the thing about these trades is you can't make, at least I don't think it's a good plan to make them up in impulse. The idea is to wait for your trade. All the work is done outside of trading hours. And then you bring your plan, you hang out. The trade shows up. Hopefully you show up and you do your job. And that is take risk, accept the random outcome. And if you've done your job and you have an edge and you start at one, and nobody listens to this part, you start with one structured trade and you make it your trade slave and you understand it inside out because it's going to teach you a lot of the pieces that must be in alignment to qualify a specific trade. If you take on too much, you're going to blow months of effort. And if you come to Trader Lab, ask other traders because we're all in a hurry. But if you're in a hurry, do you know what that is? FOMO. You're going to learn about yourself and you're going to never even think to ask the questions. But you come to Trader Lab, we're going to help you with that because we've all gone through it. We all go through it and it's part of trading. But okay, so this is too low. I don't see any further questions, right? So we doing okay in YouTube, guys? Thumb up, please. Okay. So here's our buyers. Now, there's no way to know you're going to get this. You know, welcome to trading. Oh, you want to predict something? How about this? You know you don't know. Write that down. You're not responsible for predicting because you can't. Our nature psychologically is the need to be right, and we want to predict what's going to happen. That's a manifestation of fear of loss and attachment to outcomes. As they don't do that in the casino. They just deal the next hand because they've already done the work. They know if they play the game over time, they extract the dollars from the gamblers, you see? And that is our business. So if you're trying to run a different business than the business of gaming, you are not in alignment. And that's going to cost you a lot of wasted time and potentially poor outcomes. Come to Trader Lab if you're curious about that. Now, if you have a different outcome, that's a whole different thing. Now, I'm going to, since I don't see questions on YouTube, I'm going to move on. We have two possibilities here in this now. And now things are interesting, of course. What is this? And I hope these are correct. Do we have a variable high volume node at 5328? I think we do. Let me label this. You'll see why this is relevant. So I track these things, right? You know. And this one here is too low. So I got to label this thing too. No, I don't know. You know, I always am going to tell you I don't know because if you think you know, then you're an exceptional individual because you think you know. And in trading, if you keep your mind open, then you'll be much more flexible to the potential. So we have a trade now. There's two setups, if you will, or structured trades that happen right here. One is called the IB. Now, this is the first hour's high. Remember, this is a target. First hour's low, I mean. So this is a target. This is called range extension. What this is higher time frame participants are active in here. However, we're also seeing the buying, right? So Right now, it looks like it's going to zero. Let me see, where is zero? Take out yesterday's low. It's the end of the planet as we know it. And yet, right here, and there's no way to know. So all this is mysterious. So you're just trailing your stop, subject to your plan. Here's where the buyers, the last time the buyers were activated, they failed. Sellers are below. These guys are trapped. This is how I manage a trade. So if you were managing your trade, you'd just be following the yellow brick road right here. Trapped. This is what Delta tells you and what order flow. And look at the book. They're pressing here. So it's like, push. Now these guys come in over here. Push. I don't know. Ooh, I don't know. Until this breaks, we're going south. This gives me something to think about because they're absorbed. And this is in the book. Now, I don't know if they're going to pull. I don't know if the sellers are going to, absorb these buyers and continue on their merry way. This is all the stuff we don't know because we can't predict. Right here, we take them out. The sellers, they're stuck under the bus. Thanks for playing. Broker sends you the gift basket. Once you come above here, trade's over. Okay, and there you see the change in behavior. Now we have another trade. Now I'm going to get into the next trade. We have two trades here. What I mean by two possibilities. One is a continuation trade, a short. The other is mean reversion to come back here and potentially squeeze. Let's see. This is called the IB failure. Here's how it works. Now, this is tough. Now, let me give you some qualification on this. In your trade plan, you may see this long IB failure, and the first target is here, and not take it because the trend is down. You may use the IB failure because it's a mean reversion trade. This is the mean or the retail price, and that's what mean is, highest volume. So return to the mean. But the stops are all above these swings, you see. So, and this also you have, which was too high. So the possibility is to come here, maybe, and you don't know, okay? And maybe even back here to here because all the stops are piled up. And if you're in Trader Lab, you'd know this. There's another piece, just to make you more crazy because it's my job. If this is too low, we can do this. We can come up out here. Remember the concept of the auction. What's too high? What's too low? What's retail? So if I come outside and this is too low, I can come around and try to figure out what's too high, wherever that is. And the joy is not knowing. But we know in the intermediate time frame, this was retail, but we're below it. So we can come back here and check this, and whatever we do, and come out here. So we have multiple possibilities. So here's the trade. Long here to here and squeeze. It's a squeeze play. Or if you didn't exit here, you're out here, and now you're standing by for the squeeze so you could get back short again to come back here. That's already, those are structured trades. Let's see what it does. So you'd be out of Dodge. This is a Trader Lab counter trend long to here to squeeze into there. Liquidity comes in the book. Now you got another possibility. Now we already did the VWAP here. So it's a target. So you got target, and then maybe runner. And the idea is where else are the stops? So VWAP, mid, but there's another piece. So there's a couple possibilities here. Let me give you what they are. This was too high, right? The VWAP is here. It's a target. If you sell the VWAP, again, your goal is to get here and to continue to there. That's the trade. So what happens is, here's your buyer, here's your absorption, here's your VWAP. Buyers, see, that's your seller. So right here, I know there's a seller absorbing this buying. Seller, this is where the trade fails. I got liquidity in the book. this is a short, and you're trying to go here. So the way this would work is you'd be trying to get risk neutral, or you're just coming here, and it's 2 ticks ahead. You don't get scaled, and it comes back here and takes these guys out. You take a stop. We do take stops, so it's subject to your plan. Notice here, we come up. There's a battle right here, and we're below this buyer. As long as we're under this, we're okay. VPOC migration. Warning, Will Robinson. What does that say? There's more volume now here than here, shopping. So there's more action or acceptance, and now this price is too low. Let's look. This is a problem here. As soon as this shifts, I call this a warning Will Robinson moment, because I know I got my buyers here, and I know I didn't get here. It's too low. Now, I don't know it's too low until this. Then I go, that looks like it's too low. The last gasp for this trade is to break under here and test this. And notice what's going on here. So the buyers, they're not getting there. It's a fight, okay? Buyers are here. They're not getting there. And then breakthrough. So this, if you took a short here, you would not get your target. This shifts up. This right here this is good reason right here. If we don't break like right away, like see it shifted, you're looking for rejection. It comes up. The trade fails above here because that's where it failed. The buyers, I should say, got stuck. So they're up there. You can see the behavior. But we need to get under here. We come back above. This is not good. Here. This is a good reason to jump out, or you just have your stop and you have a helmet on and you get taken out. That's just the way it works. And then we break through, and now the squeeze continues. Through the mid, through the air. So let's see. I am not looked at this. Anyway, do you guys have questions? Now, there's something else. Before I go on. Now, we're inside yesterday's range, and this is still important. We'll talk about that in a second. You guys have questions? How we doing in Trader Lab? In the Bookmap Discord Trader Lab chat? You guys tracking? And how we doing in YouTube? You doing all right? Give me a like if you like what you see. It's very helpful for the stream. All the resources of the Bookmap Discord Trader Lab are available to you. 60 PDFs you can download. All this at no cost of these structured trades, so you can reverse engineer them and create a trade plan. You also have an open invitation to come to Trader Lab. It's a community of traders looking to leverage their collective experience. I have going on 45 years trading experience, both professionally and as a retail trader now. And also, there's other traders in the Trader Lab, from new traders on to say old dogs. So if I'm an old dog, we've got one, I think, maybe only one or several who admit to it, that also have gray muzzles. So feel free to visit Trader Lab. It's a community. It's serious. It's not romper room, and trading is not a video game. Just so you know, in case, you were curious, right? So no more questions. Let's go. And there's no cost, and there's a library of webinars. Some of them are real-time narration up to 4.5, almost 5 hours long, all kinds of different conditions, and transitions from the Acapulco cliff dive to rotational trading. It's a separate plan. If you're in Trader Lab, you would be able to, not in advance, because we can't, but you'd be able to define and recognize change in behavior. Once you can recognize it as a conditional statement, like if this, then that, if not, then what? If I come across this thing, if not, if I don't hold this, and this shifts up, then what? Then squeeze. You would know that. Then where's the next level? Here. For a potential interaction with the participants. Wouldn't you like to know for sure? Me too. Don't know. So don't worry. Location. If this is too high, because it was yesterday's price and we went below it. And just like the VHVNs where we check a price in the developing time frame, this was the retail price yesterday and we left it. Well, what does the market do? Let's go back to the store and check the price. Notice we come up here. Looks like it's going to the moon, Alice. Sellers are trapped here. Oh, it's terrible. Those poor sellers. Buyers, seller, buyers. I'm in my area. Look where I am. High volume. Where does it tag? Right to the price. And you're going to say, oh, it's a coincidence. I'm going to say, no, it's not. It's only random. How do you like that? No coincidence, just maybe. Here's my buyers. Going to the moon, Alice. Why not go further? Why not go to this one? How about this? No clue. But buyers, location. Remember, trading in many ways is like, real estate. They say location, location, location. Now, you can trade anywhere you want. In a trader lab, it's about structured trades when you're building the business of trading. All that's available to you, it's no cost. You just need to click if you're in YouTube, the link in the bottom of this card, drop in, say hi. It's a great community. It's serious. There's no nonsense. It's not romper room. Buyers are here, location. For all I know, what do I see? Sellers. Change. Maybe. Where's my sellers here? I don't see them, do you? Here. Oh, it's going to go down. But I'm not at a location, you see? Yeah, it's the mid. It could have been a short. If you took it, you'd be out. If you don't take it, I look at auction. And I know this, but here, look. If you took this is where your stop would be. I'm not saying you can't. It's not my job. If I take these trades like this, because I don't know, I'm going for this. If I get right here, it fails. So if I'm entering here, I've got a real tight stop. So let's assume I enter here and I get stopped. Well, other than the things I say to my screen, this is my next location. I look at this. My buyers are here. It's the same concept as this, you see. And there's my sellers, but this is where it fails, you see. So you'd be stopped. Comes up here. Same thing. There's my buyers. Now I see my sellers. This is much better than that. You see, I didn't get the range. So now I got the range. My buyers come back. What? Right here. Now I'm going to take you down again into fractal, microstructure. And this is how we execute. These are called triggers. And you can get these in the Trader Lab. But here's the important piece. It's location before anything else. And understanding how the market operates and statistical probabilities. So yeah, there's a probability this would be a good short to here. All right. No bueno. C'est la guerre. But right here, you see the fight. The sellers worked it over here and not so much. All right. Here, buyers get absorbed. Notice the absorption. Buyers are up here. So I know my sellers are here. 822 buy stops. Thanks for playing. Look forward to that gift basket this weekend. Selling icebergs. Now, I can't, but I have a location. That's what I know. I don't know anything. So I got buyers here. They're doing great. This guy under the bus. We'll send you a gift basket. Here, icebergs. Seller. Don't know. Location. Buyers here. Looking for it to do this. What do I get? I get my seller. Now let's look here. There's the high volume in the microstructure, right there, right there. There's my seller. There's my test of the volume. It's the same concept of this. There's the test of the volume, retail price. The shoppers in here, same thing. There's the volume. There's the break. There's the test of the retail price. This is called trading in fractals. So I've got my location here, And now I have my microfractal location here, a trigger. Seller, come back and check the volume. This is like going down the street Saturday night for your pint of ice cream. There's not a lot of volume, but you walk in there for your pint of ice cream to watch the movie and you go, I can't pay $9 for a pint of ice cream. Forget about it. And you leave the little store. Short. This is a trigger. Watch, see the retracement? Retracement. So when you get this, that's your trigger. This is the test. That's your short. Trader Lab. So you're putting together this too high. Now we know that. Who knows? And yeah, you could take a stop. Welcome to trading. And this is where it was too high here. So I'm taking multiple time frames as you think of them, but I don't use time, and I'm using volume instead. And this is where the shoppers, remember shopping, said, I'm not paying this, and they got in the car. You like shopping down the street, you come back and check if the price is still too high. Liquidity comes in the book, but the most important piece is that volume right there. And then look at the pullback. This is your short. Stop is here, and then you put your helmet on. And this is your target. Right here. Didn't realize where we are. There. Okay? It's Trader Lab. Anyway, questions, guys? Didn't realize where we are in the scheme of things, but there you go. Do I have any video class to teach how I can identify? Yeah, sure. Ekata, welcome to the Trader Lab. Yeah, there's a whole library of webinars pinned to the top of the Trader Lab chat. A plethora. And they have different, different market conditions, gap and go stuff, trend days, inside days, mean reversion days, and transitions between directional moves and then going into two-sided trade. This is mean reversion right here. That's the mean. So it's outside in. Now this, who knows? But that's the target of this trade. And then, let me give you the then if we come under it, and this is the trade, by the way, this is the next target. And apparently that one's not going to happen, maybe. So here, now let's go back to the happy hunting ground over here. Anyway, Ekata, does that answer your question as far as where you can access that? And by the way, that's all no cost. There's a whole library of these webinars that take you through this, not only like I'm doing it here, but in real time. So as they're developing, I'll say, look at this. We got this high volume. You get this. If it comes back here, it's a short. And then you'll go see, boom, and it'll do it. Or it won't. I mean, that's part of trading too. But if you understand market mechanics, and this, by the way, there's no quick fix. This is another way, to kind of look at how the market works. So for example, this here, this is too high. So I have my high volume. I have right here my primary target. This is called mean reversion trading. It's a different plan. It's outside in. But what I'm doing is I'm using fractals to identify high volume. I'm not paying that to high volume. Now, what's too high? Let's see if we can figure this out. What was too high? I should be, if I was trading, man, I can tell you this would be fun. The high volume is here. The shoppers said, nah, I'm out of here. I'll catch you later, right? Target. Now let's come back to where the shoppers said the price is too high, which is there, the high volume node. Where do we come back? Right here. Now, it's not a trade recommendation. It's a potential short in the Trader Lab. This is process. And why might it be a short? I use the might, and it's not a trade recommendation. If this is too high, based on here, and in the fractal, the trigger, this is too high. I had my seller, I checked, and the seller said, oh, really? I can sell it here? Here, have some pints of ice cream. We come back to the retail price here. Maybe it's too low. And then the shoppers come back and they go, well, let's check what was too high. If it's still too high, we're going to come back here. If it's not too high, we're going to squeeze these guys out. That's trading in Trader Lab. And then you're coming back and you're looking, and you're going to manage your trade, and you're looking again for this, and same trade, this. That's Trader Lab. Is it too simple or too complicated? Just asking. How about a thumb up, guys, in YouTube? You find this interesting? Link in the bottom of YouTube if you want to visit Trader Lab. Hi, Damien. Naked volume point of control. It's the retail price from yesterday's RTH. If it's too high, auction market theory is really kind of simple, though it's different than most of us, imagine the market to be, because all of us start out in some derivative of indicators. So we think the market is defined by something that crosses over, but that's one small element in the scheme of things. Very small. And I would almost go insignificant because I don't use any indicators. I found the best, and I'm only talking about me, the best indication is the participant behavior and the shoppers. Because the whole point of having a market is to discover what something is worth. That's the only reason this thing is running around, because it's an auction. Is this too high, Lewis? Well, is this too low? Buyers. Well, that's too low. Well, let's go back and check what was too high. It's still too high. Well, let's go back. Where's the stops? VWAP, and this would be your target, and you're managing your trade. So in the Trader Lab, we use a 2-lock configuration. So I know this is possible, and I might get buyers activated here. The mechanical buyers who go, oh, it's at VWAP, I better get long. Well, this is not relevant to me at the moment. My retail price is below this. So all I'm doing is trying to get back here or here. So if I got short here, I'd be very comfortable taking a scale. This is my target. And remember my extended target, which was the same. By the way, the short from here to here, the target is this. The short from here to here, we're going to go for VWAP or this. And if I can clear this, then this. It's the same trade. So that's structured trading. Now, again, the outcome of any trade or any time you interact with the market participants is random. So the thing about trading as a business, that is the only time you're going to be taking a trade is when it's at a location. And if you understand market mechanics, how the market works, why it does what it does, and how you might get in alignment, that's what you wait for. Otherwise, you're just ordering your pizza and you're having lunch. And then you go, where's my next trade? In the Trader Lab, you would know where your trade is. There and there. This is Trader Lab trading. It's all about structured trading. In fact, those 60 PDFs that everybody can access in that link in the bottom of YouTube, download those things. You'll see this. You'll see this over and over and over. Why? It's how the market works. That's why it's over and over and over. That's why it's structured trading is about what repeats in the market. Now, the thing about what repeats is the discovery of value, of fair pricing, and trying to identify what's not fair. What's too high, what's too low. And that's what shopping is. So I relate this to a shopping experience because I'm a shopper. You guys go store. If the price is too high, you're going to leave the store. Then you're going to come back maybe to where the fair price is. But the market's also going to try to find out what's too low. Is this too low? Well, now we have proven to ourselves at the moment, this all changes. This is too high, and we checked it. No, I'm not paying that. It's too high. Now we're going to come back here. Mean reversion, specific context, a specific trade plan in the Trader Lab. And if I get under here, this thing, who knows, looks like it's support. Maybe, maybe not. Maybe they pull. Structured trade, what's most important in the structured trade world is this. And why, you ask? Because it was a long or a exit the short on the way up. So for me, If it's a trade, when we cross this, remember, it gave us two options. If you didn't cover off the low, which you would if you had a trade management process, this would be a get out of Dodge when you crossed here. And that's what set up mean reversion to come back to here from below and then maybe to come out here somewhere. Now we know this is too high because we had two locations, there and there. Well, we got here. We also know this is the outside edge of a distribution. I'm not paying that. You notice how the volume dries up? This is what the auction is about. As the price goes up, you got less buyers. You got to be kidding. And then down here, it was on sale. Oh, it's a bargain. I'm not paying that. Yeah, but it's on sale. That's your big rotation. Inside of this rotation are these little fractals. It's all the same. It's just fractal. So this is too high. That is too high. This is the outside edge. It's called mean reversion. This is your target. Then if I can get under this guy, we're going to look for too low. And this is the next target. Maybe we'll hang out a little while and we'll see if it gets there. This is Trader Lab structured trading. And again, past performance, not indicative of future results. By the way, where do you do all the work to figure this out? Number one, you participate in the Trader Lab chat. You put together a plan of how you're going to teach yourself the concepts so you can relate to this and take your indicators and kind of put them on the shelf. And it's not that you can't use them. It's that you need to understand where they fit. This is the market pulse. I'll give you an idea. Right here, this is suggesting short developing. I can't trade with that because do I get short there? I'm not at my location yet, but look else. I get a short indication. This is basically overbought here, but it's still going up. My level is here. Let's just look. Market Pulse is telling me here. Well, okay, but this is my level. So close. Absorption. Look at the iceberg selling. It's like, let me out of here. Seller, target, absorption. Next target was this, right? Structured trade. If you find this different, it is. If you want a green light, red light process, that's why we gravitate to indicators. Not so much. If you're waking up with Trader Groundhog Day, trying to tweak and tune, move the trend line, change the oscillator, maybe instead of a 9 EMA, it'll be a 20 SMA. I don't know. We all have all done it. That's all I can tell you. If you've done it, the problem we have, and I always start the stream with this, but I want to repeat it. Gamblers win. They walk out with the cash. They just think they have to maybe play the game a little better, right? Traders have winning trades. So they want to get better. This is cool. So they tweak and tune and this and that and move this and move that. Take their charts, look back a few weeks or 8, 10, 20 days, whatever. Look at rotations, slam a stochastic over it or something. And think now it's fixed. That's Trader Groundhog Day. We are in a random environment. It is governed by a process of price discovery, which is the auction. Indicators are derivative of some price measurement. They don't tell you that you might want to be short. Do they tell you to get long here? Or do you understand that all you would be doing today is selling, unless you're a counter trend trader? Next target is here, by the way. So this is a short from here to here. You could be out or whatever, you'd be scaled, primary target. Comes back here, it's another short. You'd either be out here or you would just ride this thing back because this is your first target. You see this, you can add, or it's an initial short if you didn't get short up here. And now scale, and now we're going here. And of course, it's not a trade recommendation. I don't call trades. Why don't I call trades? Because your job is to learn how to call your own trades. See, the thing about Trader Lab is if you know you have it, here's the thing. You know how we are managed by our fear? Uh, our wiring is to run from the saber-toothed tiger. In other words, pain and fangs. Define it any way you want. Burning building, I'm out of here. Step in front of a bus. You're not thinking about jumping back on the curb so you don't get run over by the bus. There's some other mechanism at work, and it's all in the wiring, okay? Great for survival of the species, I always say. But in trading, we are stepping in front of the bus. We are running and grabbing the tail of the saber-toothed tiger. We are running into the fire. And that's what makes us fearful, move stops, bail out, or I'm going to be stopped out here. I don't want to give it back. And you bail out here. And then you get this. I'm just saying. In the way you get around that is you have statistics. Trading is random, and let's call it nebulous. If it's random, we can't change that. But if we have statistics, it creates something that becomes tangible. The casinos play their games the same way because they have statistics. They don't change the game. We have a real problem with that, right? So if you can convert randomness into probabilities, it gives you courage. So when you know this trade is coming, you would open your book or binder where you have screenshots, examples, and metrics. You would look at it, you take a deep breath, and you'd be waiting for it. That's Trader Lab. When it comes here or here, which is a structured trade, you are waiting, you are looking, and you have defined the trigger, and your trigger is against here or here, against this. So we have it. That's a short to there. This trade and this trade are same trades. The difference is this would be a profitable trade. This is a profitable trade, and this one is going to the target that was the same target from this trade, Trader Lab. And once you have statistics, while the outcome of any individual interaction or trade is random, remember, casinos, the outcome of any specific hand is random. If you have an edge, it gives you the courage to execute the trade, put your helmet on, and depend on the statistics, like the casinos do, that over a large sample size of interactions, you're going to extract the dollars from the gamblers. You have to decide, in my opinion, which side of the table you want to be sitting on, even though we all take stops. I mean, you got to protect your account, but that's the business. If you're interested in the business of trading and you're in YouTube, click the link down below and you can visit Trader Lab. Download the 60 PDFs, next target, of structured trades. Become part of a community of serious traders that are in the business of trading and are building the business of trading. I believe anybody can learn to trade if they put the time in. And there's no shortcut here. There's no plug and play. You have to actually do work. If you want to be in the business of trading, and we all know what trading might do for us financially, you got to educate yourself, and you got to undo all these habits you've developed previously, which we all have. We all have beliefs. The fallacy I find is if we believe something, our mind is going to try to prove that it's right. And because of the random outcomes, the gamblers getting paid, we think we're on the right track. That's what we call catch-22. Did you guys ever read that book? It's a catch because we get paid. So we keep trying to fix something that's defective. You see our target? You see? So anyway, you can come to Trader Lab. There's no cost. Download the 60 PDFs. They look like this, and I'm not done yet, but I'm just going to show you what they look like. Circles, arrows, explanations. There's no cost. I am not a vendor. This is an hour and a half out of my life. Plus, I do drop in the Trader Lab and interact with the participants, and it's a great community of serious traders, very diverse group. We got guys doing options, we got swing traders, And of course, and we even have more micro-oriented traders that are going in shorter time frames as you think of them. I think of them as fractals. But, and I did these like this, 2020. So I created these. I'm not an educator per se, though I educate. That's not what I do. That's not my quote job. My job is the same as yours. I've just been doing it longer. That's all. That's really all it is. Any final questions? And by the way, this stream is available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and review and compare. How did you do today if you're in YouTube or even visiting Trader Lab? Do you have these trades in your playbook? If you don't, or if you were trading, you might want to review this stream and just see what the Trader Lab trading was like and compare it to what you were doing and determine if this might be something that might help you on your journey. Guys, there's not one way to trade, but I think if you can identify what typical retail traders do, it is not realistic to expect a different outcome by kind of walking on the path that other retail traders have using canned plug-and-play indicators and think that you're going to have an ATM in the basement. I don't think it's realistic. At least it wasn't for me. And when I started out, retail, these indicators were just becoming available. Wells Wilder, all that. And before that, it was really, for me, I learned classical bar charting at the CME. And the fallacy of classical bar charting is it's based on measured moves. So I thought trading was something you predict. Oh, it's going to go here. It's going to go there. How about, I don't know where it's going, but I do have structured trades. And I do know if I operate with structured trades at locations that give me an edge there, and that the market operates as an auction to there, and then if I can get under here to here, and gets better, if I can get under here and get under the low, then it gets more interesting. Maybe here, not a recommendation. Final questions, please give a thumb up in YouTube. It supports the stream. Subscribe to the channel in YouTube. This stream is available exclusively and a lot of additional resources in the Bookmap Discord Trader Lab chat, and you're all welcome. There's no cost. I don't know where, the term no cost, how often do you want to share and leverage your experience with other traders? Typically, you got to pay. Well, guess what? While it's available, and one never knows how long this will continue, I would suggest visit the Trader Lab, then draw your own conclusions. And if you're not sure if Trader Lab's right for you, and it's not right for everybody, believe me, nothing is, ask in the Trader Lab, what do they recommend? How has it impacted their development? Traders who maybe been trading for 10, 15 years now are profitable when they were inconsistent previously. Other traders have gone on to prop. Other traders are generating an income. And of course, that's no guarantee ever that that'll work for you. The journey in trading is much more complex, but the process of trading does not have to be complex. The complexity comes from randomness and trying to create certainty. Remember how the casinos operate? They operate in a random environment and only play games with a statistical edge. Trading business is similar, and that's our model. If you're interested in Trader Lab, click the link in the bottom of YouTube and come on over. You're going to like it. Thumb up on the way out. Thanks for visiting Trader Lab today, guys. Follow a vetted structured trade plan. Leave the gambling to the gamblers. And at Trader Lab, I will see you in the lab. Thanks again, guys. Thumb up on the way out. Helps the stream. Appreciate it.